We're back with another explainer video, and you know what that means. Today we're doing a deep dive on Arch Finance. We're going to discover how they help create diversified crypto portfolios without spending an arm and a leg on transaction fees. Chasing yield on Ethereum doesn't always pay off. Arch Finance has set out to solve this. So, what is Arch Finance, what makes them special, and how exactly do they improve the process of investing in Web3? Let's find out. Arch is a crypto asset management platform that creates investment products to maximize the benefits of Web3. They've taken an on-chain approach, so theoretically anyone can benefit from hassle-free yield generation. Their mission is to provide diversified, cost-effective exposure to the decentralized economy, and their vision is to empower all Web3 investment portfolios. So how do they do this? Arch lets you build a diversified crypto portfolio in minutes without needing prior investment experience. Arch set out on their mission from a simple yet powerful hypothesis. They wanted to investigate if index-style products could be created in the crypto world such that they actually synergize and work well together and create additional value when combined into a portfolio. In other words, they wanted to take the good stuff from traditional finance and offer it in the Web3 space. The result? Tokenized indices. Now let's talk about problems. Participating in the Web3 ecosystem as an investor can be overwhelming due to the number of concepts and jargon, and it can already be challenging enough to constantly optimize a portfolio and chase the most optimal yield strategy. Plus, most DeFi investors aren't qualified day traders or accredited investors. So knowing exactly which assets to buy and hold can be an uphill struggle, and traditional yield strategies involve chasing the highest performing protocol, which complicates things even further. Now here's an example. If you're investing in 4 Ethereum staking protocols and you're paying a $10 fee for each transaction, you'd need to invest at least $2,000 for a year just to break even. If you invest $3,000 for a year, gas fees would cause you to recover only 35% of the stated APY. So the truth is, gas fees can really eat into your potential gains and significantly impact the profitability of your investment. Arch offers a way around this issue of gas fees impacting profitability in quite a neat way. They've built the Arch Ethereum Diversified Yield Token, or AEDY. And if you're wondering why the token's name is so long, don't worry, because it's actually quite simple. The AEDY token is an ERC20 token, and it consists of a selection of protocols that accrue yield through strategies of staking and lending. And what does it actually do? Exactly what it says on the tin. It provides diversified exposure to yield-bearing protocols on Ethereum while minimizing APY volatility and protocol-specific risks. So in a sense, with the AEDY token, you can have your cake and eat it too, by efficiently reducing risks and maximizing upside potential. So let's get into the products. Arch currently offers 7 different products, which fall into 3 categories. You've got 1, index style, 2, yield bearing, and 3, adjusted risk. Now, as you might expect, each product is designed to cater to different investment preferences and risk tolerances. And what about security? The products are completely collateralized with the constituents locked in transparent smart contracts. The liquidity of each constituent token is housed on Uniswap v3 pools. Investors also have the added benefit of these smart contracts operating based on a robust methodology developed in-house by Arch themselves. And of course, the contracts have been audited to address any vulnerabilities. And now that we've got a clear overview of Arch's solution to navigating the quagmire of transaction fees, we can dive a layer deeper into the 7 products they offer, and we'll go through each of them in the walkthrough. Now at this point, we've seen the transaction fee and gas problem associated with chasing yield, we've seen how Arch solves this issue, and we've seen the 3 product categories. So in case you're wondering how Arch Finance's primary solution, the AEDY token, stacks up against traditional yield-bearing strategies, we've got some numbers for you. According to the available data, while conventional yield-bearing strategies have given APYs between 0.6% and 7.5% in the past months, AEDY has had a smooth 4.72% average APY. And yes, this figure is a net yield amount after factoring in the associated fees. Beyond the stable APY, Arch is already backed by over 2,000 holders, has processed over $3.1 million in trading volume, and has over $500,000 of assets under management. So now, armed with all of this information, let's explore Arch Finance together. Now, once we get to arch.finance, we can scroll through the homepage, and if we go halfway down, we'll see exactly the steps that we have to take to get started. Very simply, all we have to do is connect our wallet, we choose the products that we want to buy, we decide how we're going to buy them, and Arch does the rest. So we click on Get Started, and that takes us to app.arch.finance. And of course, we're going to start by connecting our wallet. Now, as soon as we get to the sign up page, we see a few options. Today, I'm using assets that I already have in my MetaMask. And at this point, if you're following along, I should warn you, I strongly recommend having some Matic in your wallet, as using ETH can be a bit slower and more expensive. So we're going to start by connecting our wallet. Now we immediately get to the overview page, but first I'd like to make 3 quick points here about getting started with Arch. Firstly, to get started, you have 3 options. You can either buy the Arch Finance products directly on the Arch platform or on-chain with dexes like Uniswap, Matcha, and Zerion, but there's also a third option, which is to buy through a wallet like MetaMask, Rainbow, or Coinbase wallet. Now, the second point I want to make is about deposits into Arch, which are also quite convenient, because you can choose between using a credit card or sending assets from a centralized exchange like Binance. Now, this is brilliant for minimizing transaction costs, because if you do pay with a centralized exchange, you can send tokens from Ethereum to Polygon with no costs beyond the transaction fees. And the third and final quick point that I want to mention is that Arch offers a personalized product recommendation based on your risk profile. All you have to do is click on this Guide Me button right here. You complete a very short risk assessment, get your recommendations, and you're good to go. So let's explore. So on the left-hand side, you'll see tabs. We have the Overview tab, which we're currently on. We have the Products tab, which will give us an overview of the 3 categories that we just mentioned. We have the Trade tab, which lets me select what I want to buy and select what I want to pay with. Then we have the Send and Receive tab, which is for transactions. We have a Rewards tab. If you have a referral option, then you will earn 5% of the investment. We have the Settings tab, where you can customize your profile. That's pretty cool. I've activated my email address here. And you have the Help tab, which takes you to a new page. So let's get back into Arch, go to the overview page, and explore the products, which will take me to the product page. As you see, when investigating these 7 products on Arch Finance, they are divided into the 3 categories that we mentioned earlier. So you have risk-adjusted category, which is displayed as a portfolio. Then we have the yield-bearing category, which contains AEDY and ADDY. And finally, we have the index-style category, which has Web3 applications and cryptocurrencies. So going back to the portfolio section, you'll see up top that the bold portfolio has both the highest risk appetite and the highest returns. Just below it, we have Prudent, which has the lowest risk appetite and the lowest returns. And finally, we have the Equilibrium portfolio, or AP60, right down the middle in terms of risk and reward. So we're going to start by investigating AEDY. Now, the fund consists of a selection of protocols that generate returns through staking and lending strategies. If we scroll down, we see the past performance, which we can play around with. And if we scroll further down, we see the token allocation. Now, this is brilliant because I can see exactly what I'm investing in, and it goes for all the other products on Arch as well. Further down, we have the statistics drop-down menu. I can see the market cap, the content supply, and the fees associated with investing in this product. And finally, we have the details drop-down. Now, this is also brilliant because you can directly copy the address or see the fact sheet, which will be opened in a new tab. Now, going back to Arch Finance, clicking on the products. So within the index style category, we have 2 products. We have Web3 applications and cryptocurrencies. The products themselves are called Web3 and Chain. We're going to start by investigating Web3. And once again, here I can see the current price of the token and the past performance. And if I click on the allocation tab, I see the contents within. Okay, so we've explored the categories and the products. Now let's buy one from each of the 3 categories. We're going to start by AEDY. So I click on AEDY, and if I go to the buy button, it's going to let me decide what I want to pay with. So Matic is the cheapest option. You'll see here that I can also pay with a credit card, or I can bridge my funds from a centralized exchange like Binance. So I'm going to input the amount that I want to spend. Let's go with $30 worth of Matic, and I want to make sure that I'm buying AEDY. So I'll get a quote. I'm given an order preview. I see what I'm paying with. I see how much I'm going to pay. The transaction details are all on the same screen. If I submit, I should get a MetaMask pop-up. I see the transaction details. It looks right, and I confirm. And we've made our first purchase on Arch Finance. Now let's pay our second asset on Arch Finance. We go back to the products tab, and this time we're going to look into AAGG. This is the most aggressive option on Arch Finance. It has the highest risk appetite and the highest returns associated with it. So we'll go to the buy button. We will decide what we want to buy with. It's again going to be Matic because it's the fastest and cheapest option. I'll make sure that I'm buying what I want to buy, which is AAGG, Arch Aggressive Portfolio, and I'll get a quote. Perfect. So I see that I'm paying with Matic, my expected payment is displayed, my transaction details are visible, and if I submit, I should go straight to the MetaMask pop-up. 11 cents in gas, really cheap. We like to see it. We confirm the payment and we've made our second purchase. Now what's really handy at this point before we make our third and final purchase on Arch Finance is if I go to the Overview tab, I can now see my assets displayed either in dollar form or as a percentage of the total availability. And I can toggle between the two by clicking on this button right here. So it'll show me what percentage of my assets are usable or how many dollars of each asset I have. So now we're going to go back to the Products tab and we're going to buy an index style token. We're going to buy the Web3 Applications token or Web3. And essentially here I can invest in the governance tokens or utility tokens of my dApps and DAOs that I'm interested in. So I scroll down, press the buy button, once again decide how much I'm buying, and I get a quote. I confirm the transaction details I'm buying with Matic. I see the minimum amount I'm going to receive. I submit and I get my MetaMask pop-up. If all seems well, we have confirmation. And there we go. We've made 3 purchases on Arch Finance, 1 from each of the 3 categories available. So the beautiful thing with Arch Finance is with 6 or 7 clicks, you can essentially build a diversified portfolio of assets in just a few minutes. You can do so without prior investment experience, and you don't need to be an accredited investor. And there you have it. We've covered 3 main points today: how Arch Finance has gone about understanding the limitations of Web3 investment strategies, the frustrations people experience, and the solutions offered by Arch to overcome them. As we can see, Arch Finance is really looking to shape the future of investing in Web3 by managing the complexities of the decentralized economy. The 7 products we've seen, which are split into 3 categories, can empower investors to own a stake in the platforms they love and use, all with a focus on delivering consistent and reliable returns.